What is going on, everybody? Welcome into another edition of the Daily Energy News Beat Stand-Up here on this gorgeous Friday, February 10th, 2023. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Dallas, Texas. We appreciate you joining us here today. It's Friday. You made it. Deep breath. I hope you've only got 1 to 2 meetings and you can ditch out early for the weekend. That's the vibes we're sending out here on Friday. I am joined, as always, by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. My man, how we doing today?
It's a beautiful day in the neighborhood. I'm ready for the weekend.
Yeah, it's been a long week, Stu. It's been a long week. You know, much like our listeners, we've been beat down with all this negative news. I think we've got some really great stories to highlight, but we hope you guys have had a great week and are geared up for the weekend. Not to tease, Stu, I think this might be our best show of the week when it comes to stories. I mean, we have some absolute bangers lined up.
Oh, yeah. Yesterday's was good too, man. It was crazy.
Yesterday was a good lineup of stories. I think this one. So here's what we've got for today. First one, U.S. looks to Asia for long-term LNG demand. It's got to come from somewhere. And so I think it'll be interesting to see how this LNG market pans out. Stu will cover what this article talks about. Next one we have is coal and natural gas plants will account for 98% of U.S. capacity retirements in 2023. Another, probably the most depressing story we've ran all week. I mean, I mean, as much as I love coal, you know, we should probably be canceling our coal plants, but the natural gas plants, I mean, that just is asinine to me. Next one, how America took out the Nord Stream pipeline. We wouldn't let you give way on a Friday without a good conspiracy theory, even though unfortunately it's now confirmed with all the data. Stu will cover how we did actually take out the Nord Stream pipeline, which just seems crazy. Next, this is just funny. Duke Energy takes $1.3 billion charge on Renewable for unit sale. Stu will have all the details on that write down and the tax credit implications on that. He'll kick it over to me. I'll cover what's going on in the oil and gas markets. We did see natural gas prices pop a little bit today due to a fairly bullish natural gas storage draw. Crude oil prices hanging out at that 75-60 mark. I'll also talk about two interesting stories. One, commodity trader Trafigura looks like they got caught up in some fraud, but old school fraud. Very interesting. We'll cover that. And then ExxonMobil announcing record earnings and then drops 2 bombs within that release. One on the consolidation of units, which is going to result in more layoffs, and then the launch of a global trading unit, which I think is really interesting and I think goes to a viewpoint. We've got a lot of thoughts and we'll cover all of that and a bag of chips, guys. But first, check us out. World's greatest website, www.energynewsbeat.com. You literally will get smarter the more you go there. I mean, it's scientifically proven. We're working on getting the FDA approval to get that rolled out. So just wait. Fauci's on it, guys. Don't worry. But it's proven, much like the vaccine was proven to stop transmission of COVID-19. It's proven to make you smarter. So take that little tidbit and do with it what you want. But enough of the pleasantries, though, Stu. Where would you like to begin?
Well, I'm going to tell you right now, it's not the radiation coming from my forehead that makes everybody smarter. So we'll just stop with that one. Okay, let's start with Duke. You know, I love me some Duke, but this one really brings up some stuff that's just coming around the corner. The title of it is Duke takes $1.3 billion charge on renewable unit for sale. The tagline on it is Duke Energy will take $1.3 billion impairment loss on the sale of its commercial renewable business, which it now expects to close later this year, according to its earnings release. Michael, this is kind of like the old tax deduction. You get a tax credit and then you sell it. Where does that go? This brings up,
well, it's the difference between book value and physical cash. So it's the same. It's, again, I'm not going to compare Duke Energy and Duke Energy to FTX, but that's what happened with FTX. Their balance sheet was balanced because it had all of this coin, which was assigned a value out of thin air. So again, not comparing this, but that's how these balance sheets work. You have assets and you have to come up with a valuation of those assets, and you can inflate the value of the assets as much as you want. And so what they did here when they originally were valuing it at 3 to 4 billion, they were including the tax credit, which was paid out over the first year of operation, according to this article. And now all of a sudden they have to write those assets down to their actual level if they were to sell on the open market today. Because guess what? The value, the tax credit no longer gives with, is associated with. So the tax credit was about $1.5 billion, or the entire value of the renewable project. It's absolutely insane to me, because they had a book value of 3 to 4 billion. So the tax credit was at least 1.5 billion, may have been more.
Right. But it does not make any sense then. So how do you get back and say that solar was even able, I mean, wind was even able to supply?
No, it's a proof. It's a proof. It's proof once again that these things are economical projects due to the tax credits. And when you get farther away from the tax benefits of renewables, there's not much left over in the investment.
No. And it is. I mean, the bottom line is that write-offs, generally speaking, are not good, said analyst Paul Patterson of Glenrock and Associates. We're finding that in some of these cases, values in these companies have to hold on their books for these assets is different when they try to go sell them, and not in a good way.
Absolutely. It's a downward shift, because it's a downward shift. So this is inevitable with this is inevitable with any project in which big tax credits are associated with it. And it happens to be renewables fall in that category. So this will be fun. I mean, BP's going through the same thing. They're just not, BP will do the same thing with their big solar projects. Equinor, I mean, Equinor doesn't, work in the United States, I guess, but I mean, they do a little bit. What am I saying? But all of these big renewables companies are probably going to deal with some version of this extreme. Who knows? But if there's ever
this brings up a great point, Michael, and that is ESG investing. So if you have the big ESG investing houses, and everybody's thinking that they're getting a good rate on return, but those rate on returns are actually falsely teed up by the taxes.
Yeah, it's like what the oil and gas industry was doing with growing production and not cash flow.
Right.
It's the exact same thing. The focus has been on, what's the value of the asset? And now it's shifted towards, we have to adjust for these tax credits because they run out after a year. Much like everyone realized, tell me Lynn Energy is not actually giving me any money, growing production and just consolidating my stock price. You know what I mean? Like it's got Lynn Energy vibes.
Ooh,
not good. Not
them
good.
fighting words, dude. Okay. Hey, let's go to the next one here. Coal and natural gas plants will account for 98% of U.S. capacity retirements in 2023.
Kill me.
I'm going to go on record here in a minute after we finish this. Okay. Substantial coal U.S. fired has retired over the last decade. 14.9 gigawatts was retired in 2015. Annual coal averaged 11 gigawatts per year from 2015 to 2020. And
interesting, in 2021 decreased to only 5.6 gigawatts retired, and then increased to 11.5 retired in 2020. That's interesting.
But here's the thing. Natural gas this year, 6.2 gigawatts of natural gas fired capacity is scheduled to retire, representing 1.3% of the natural gas fleet. There's a good graphic in here representing where these are coming from, but they're not going to be retiring the petroleum ones because those are really in cold standby. It's easier to have a cold standby
crude oil facility
than it is a coal. So those are not going to be retired.
I'd be interesting to see. And here's my thing. I'm not against retirement. I think things get old and you need to replace them. So the real question is, have these places gone about replacing this base load energy? It may never know. The natural gas, you can tell, is Southern California, Redondo Beach, Huntington Beach, and Alamitos. They probably are not getting anything new is Ohio probably getting something from natural gas? Yeah, they're probably switching over to a more modern natural gas facility that's been expanded out. I mean, we could go figure that out. But the real question is, what's it being replaced with?
Exactly. But on the other hand, down there in, I was looking up California, they get most of their natural gas from Colorado coming in from those fields and across.
God
Do
bless
what?
Colorado.
God bless Colorado. But in the northern part of the state, they get it from Canada.
Take me home.
Okay, let's go back to the next one. Asia is looking to, U.S. looks to Asia for long-term contracts to help. Growing LNG capacity in the U.S. requires long-term deals rather than short-term deals. It's 27 years is what China just signed with Qatar, what, 2 weeks ago, 3 weeks ago? And so when we take a look at this, that's what it's going to take to build out some of these facilities. It's going to happen because LNG is such a great investment. The U.S. has been a ideal last minute LNG supplier, but that's going to get sucked up. All of our takeaway is going to get sucked up into long-term contracts. Won't that just flatten the price volatility?
It probably will. It means that we think we're going to have to we're not going to be able to produce as much here that we consume, which I think is
but it will,
you know,
less for Europe because Asia is increasing so much that it is definitely Canada is what this article is telling me is Canada is missing the boat because the LNG market to Asia would be phenomenally out of British Columbia. They could just
they could crush it. But I mean, we'll take it. We've got enough LNG to export. I mean, we could use it right now with these prices. I build as many LNG export facilities as we need to get as much as we can. Let's get these prices up quick. Can we get one done in 3 months, Stu? Is that possible? Can we get an LNG export facility done in 3 months? Regasification in 6?
I just did a with Nick. I'll cover that here in a little bit. But
what do we got next?
Okay.
I think, we got your conspiracy. We've got how America took out the Nord Stream pipeline. Okay, so break this down for us, Stu. What's this article saying?
Okay, this article, there's about 4 or 5 videos out there, and this one really was the best that I found.
Okay.
Putin said there when it happened, there was a real question. The article's titled "How America Took Out the Nord Stream Pipeline." Nord Stream 1 and Nord Stream 2 are actually a set of 4 pipelines that come from Russia to Germany. They go under the Baltic Sea. And in the Baltic Sea, the map shows where these things were blown up. 3 of the 4, again, there's 2 pipelines, but there's actually 4 in the group. 3 of the 4 are blown up. And it was Nord Stream 1. Let's go to this part here. This is a false and complete fiction. Tammy Thorpe, a spokesperson for the CIA, said this claim is completely and utterly false. Where it is in the data here, they say that in this document that all of the planning took place. They brought in, there's 2 different diving teams. Everybody thought, oh, it's got to be Navy SEALs. No, it's the deep diving group out of Annapolis, which is a different group. They were then carried out to Norway. Norway has a very large U.S. military base there. And then they bring them in from Norway and they dropped them in. And so when they were getting ready to drop them in, they were also saying that they were diving down, putting the C4 explosives on it. And then Biden said that he wanted to go through and have it be able to remote detonate at a certain time. So the CIA then had to go back and redo the detonation devices. The detonation devices were then come up with sound buoys. So when a sound buoy would drop off, it would pick it up in a code, and it would only have to drop off a sound buoy. There was a big war games going on, so they wanted to make sure that they did not get blown up during that war game in that area. So they did all this, they made it done, and I have to hand a shout out to David Blackman. He said it was probably the United States months ago. And it was because there's only two countries that could really pull this off, Russia or the United States. And if Russia did it, they would have to come up through the Black Sea, all the way around through the Strait of Gibraltar, back up around. And then Putin actually said it best, why would I want to blow it up when I got one end of it in my country?
Mm-hmm.
So this whole thing being said, Michael, it's very detailed, very laid out. And we had to have been based out of Norway in order to get this done. I found that the most important part of it. And then when you sit back and look at it, it does make a lot of sense.
Yeah. We'll trust the random dude on Substack. We'll trust the random dude on Substack.
Hang on. Now, Biden on this random dude on Substack even said he would take it out in a.
I know Biden said he would take it out. So here's the thing. I don't know who this author is. He's like an established like Substack author. Like, who is this guy?
I don't know, but everything in there checked out from 4 or 5 other places.
Okay. The only reason I even slightly believe this is because Biden did literally say with his own mouth, we're going to take it out.
Right.
I mean, literally what he said. So this article reads like a Tom Clancy novel. It's so, but you know,
verified in all these other different sources. And this is one of the best articulations of what could have happened. I will say that.
Could. You're right. Could.
All right.
But random dude on Substack's got it. So we're good.
Oh, absolutely.
That's what people say about you. Some random dude on Substack. That's how
I don't mind being a random dude.
Just kidding. You got anything else?
Yeah, LA, there's one thing here that you got to read here. LA is shutting down its largest gas plant and replacing it with an unproven hydrogen project. This one goes in with that other story that we were just talking about with natural gas in California. It's kind of funny. They were coming in here, and the city's ultimate goal is burning 100% green hydrogen. If they're sitting there saying that natural gas in the homes needs to go away, hydrogen's not going to replace it because pipes leak even more. So we're not going to be going there anytime soon. It just means more higher prices. All right.
That's fun.
All right.
That's fun.
That's all I got to say.
All right. Well, we appreciate it, guys. We'll get you out of here fairly quickly, but I actually do have a decently long finance section. Crude oil prices quickly. Currently trading 77.65. Time stands here about 6:50 p.m. Actually on the 9th, the night before, as we record. Not much really that we saw. You know, you Google and you hear what Reuters has to tell you. They'll claim it was because of some earthquakes and choppiness. I mean, again, we're just in a fight, but we're just really in a fight between the supply and demand side, and really what's going on with the dollar. I think as you know what you saw with the overall markets today. S&P 500 drops about 0.8 of a percentage point, 0.9 of a percentage point for the Nasdaq. Dollar weakens again off global recession fears. That's gonna, pull back. Again, we're still at 77.65, so nothing to be too terribly concerned about. But we're gonna see some choppage. It's not just gonna be bull gains to 120. I mean, we may not get above $80, $82 in this run. We may be at maybe the peak of this sort of peaks and valleys. So it's going to be fascinating, and we will make sure to cover everything that's going on with crude oil prices. Natural gas, it was up, then it was down, then it was up. really it was down off a little bit of a warmer weather outlook, but then we did get the EIA storage and injection numbers. We had a draw of 217 BCF. Last year we did 228, and that 217 fell basically at the higher end of the range of expectations that analysts had between 187 and 212. So a little bit over, giving a little bit bullishness to gas prices, currently trading $2.45 again as we record this the night before at about 652. So, again, I think growing surpluses next month is really what's on the horizon. Freeport has mentioned that they're going to start and scheduled their next, one of their first deliveries. I saw that just dropped this afternoon. So here in a month or two, we'll be able to start seeing all of that gas get off. So, I think there is some bullish signs in the future. I was talking to some guy at the office that he's all in on natural gas call options. So we don't give advice here, but rumor on the street is people are making moves that way. So it'll be interesting. Fool me once, shame on me. Fool me twice, shame on you. So I'm out on taking a stance on natural gas. I'm good. I've already had to fight Goldman Sachs off. They're trying to hire me now more than ever just because of my bullish stance I had on natural gas. So I will take that one in the chin. There's just a couple quick stories I want to cover. One, this is hilarious. Okay. Article you find again, energynewsbeat.com, world's greatest website. Commodity trader Trafigura faces $577 million loss after uncovering nickel fraud. Okay. And, global commodity trader Trafigura Group is facing more than $500 million in losses after discovering metal cargoes it bought didn't contain the nickel they were supposed to. Yes, people, you heard that right. They did not get caught in some complex financial trading scheme. There was no undercover Mossad agent. There was no private island and Jeffrey Epstein. This was literally traders discovered nickel cargoes that didn't contain nickel. I mean, the article goes on to say, Stu, Trafigura has spent the past 2 months uncovering what it believes is a systematic fraud against it. It has started legal action against Indian businessman Parikh Gupta and several companies connected. The missing nickel is a blow to the company. Where does it say, like, legitimately,
the trader discovered nickel.
The trade began to unravel when Trafigura investigators arrived at the port of Rotterdam just before Christmas to check on the contents of the container that were meant to hold nickel. When they cracked it open, it was full of much lower value materials. Literally, the nickel just wasn't there. So, I mean, this was just a open and shut fraud case. It's unbelievable. And it's pretty crazy that that's how one of the largest, I mean, they're up there with the Glencores of the world. They're up there with, all of the big players. And they don't even check the metal they're getting.
No, somebody should be fired on that one.
Oh, they did. The second bullet point is nickel and cobalt head Socrates Economou is leaving the company. I wonder why.
Yeah. He's probably going to go work at
enforcement. Yeah, he's probably going to go work at Goldman Sachs. But I think the only other thing that'd be interesting is ExxonMobil. They announced record earnings, but really the net profit, 56 billion, which was a record, was really cast a shadow by two major announcements that they made along with this. So remember, top headline, 56 billion record profit 2022. Next line, ExxonMobil then says in its move to cut costs annually, $9 billion from by 2023. They were supposed to cut $9 billion from 2019 levels by 2023. Interesting, after posting record profits, and they're merging business units. And in that process, they're going to be reducing their workforce from a little bit above 70,000 down to 63,000. So in a time of record profits, we're going to lay people off. I mean, you almost have to admire the savageness of it. I mean, most of these companies are talking about share buybacks and, we're handing out cash to investors. Exxon says, nope, we're laying people off. Record profits? No. Trim the fat. I mean, you used to work at IBM. This smells of IBM.
No, Intel. Yes.
Intel, whatever.
Oh, yeah, it does. I mean, they fired the bottom 10% every single year.
Like clockwork, even with record profits. I mean, You
That
know,
was back in the
you
heyday.
have to admire it a little bit. It's savage.
It is brutal, but boy, you ought to see people claw on their neighbor and their coworker to not
Yeah,
be
no
on that
kidding.
bottom 10%.
Oh, of course, because you're getting ranked every single day in that type of system. And then the second interesting thing is that a part of this consolidation, they're going to be launching a global trading unit, which they're one of the big super majors that haven't had it. I mean, to be honest, it's a great idea. If you're an integrated oil and gas company where you have midstream and downstream and upstream, it makes sense to have your own in-house trading unit so you can execute your own hedges. You can keep that all in-house. You can better vertically integrate and start to trade with yourself on a physical basis. And you actually make some money because you are keen into the market. I mean, the one thing that why does BP have like one of the world's most well-respected, well-renowned trading houses? Because they have all the data. It's pretty easy when you can have a map of the world and you have your own proprietary data flowing in with the ability to buy every other data set out there and, you know, literally having your fingers on the scale. That's what Exxon is going to be able to do when they roll this out. And I think it's going to be a key move. It's very interesting that they're just now doing this, but that'll be a fun job. Watch out. You guys hiring? Nah, they don't need a bull like me, unfortunately. I'd just be buying call option. I want to be on their proprietary team. I hope they have a small proprietary trading team where it's all just gambling. It's all just guys in a room, bunch of cigarettes and Red Bull coffee, and they're just buy, and they're just boom, screens everywhere, hairs everywhere. That's what I hope. And if that's the team I want to be.
You would be fabulous in that chair.
You know, it's like old school. You just got you got typewriters and you're calling in trades to somebody, you know, phones flying everywhere. It'd be great. So if that job's available, let me know. Okay. Otherwise, unfortunately, I'll stick it out here and just keep everybody abreast from the outside. Stu, I think this was a great Friday show. What else do these people need to know before they start their weekend, or if we bored them enough?
Oh, I don't think we did. I just like to thank all of our listeners. We're getting some fabulous feedback. We appreciate everybody. Check us out on the Energy News Beat at Substack.com. And
Random Guy on Substack, that's us.
Random Guy on Substack. Love me some Substack.
I love Substack, but I have to say my one beef with Substack is now anybody can just start a Substack and now they're newsworthy. Like, should we be, you know what I mean? Like I could start writing a fake fitness blog and then, but it's on Substack, so it's real. You know what I mean? You have to screen it a little bit.
No, Substack has done a great job marketing their platform and saying that, he's on Substack. Tucker Carlson introduced a guy and said, he's a Substack guy.
I agree. I'm not saying
but
that's like saying anybody with a Twitter account should be famous. Like, is this guy verified? Like, that's what I want to know. That's what Substack needs to roll out is like a verification process.
Data in about 16 different places.
I'm with you. I'm not talking about this guy specifically. I'm just saying in general, we are the Random Guy on Substack still, but that's fine. But to get back to Stu's point, yes, we really appreciate the feedback. I hear you loud and clear. We're trying our level-headed best to replace Stu, but the interviews aren't going great. We can't find anybody. So we hear the feedback and we keep working on it. But with that, guys, we'll let you get out of here, get back to work, and hopefully finish early and start your weekend. If you're one of the many oil and gas service workers, linemen in the electrical business, or any type of service worker that's got to work this weekend, God bless. But with that, it's the weekend, guys. Stuart Turley, I'm Michael Tanner. We gone, folks. See you Monday. Maybe.